Hello everyone, FX Bright here, the trade guru. So on this video, you're going to learn how to use the Fibonacci retracement tool and the extension tool to determine entries, stops, and targets. And you're also going to learn on the different kinds of retracements and how to use this Fibonacci retracement tool to take very good entries. And this is a full strategy video. You're going to learn everything on how to use this Fibonacci. So if that's something you're interested in, I'm going to see you guys after the intro and the disclaimer roll. Alright guys, the first thing you want to understand is that price is always moving in a wave pattern, right? I just want to show you guys this before I start giving you guys the details that you need. Now, I'm saying that before price is going to move to a certain point, price doesn't just fly from this point to this point. What price will usually do is that price will move in wave patterns. So this period where price is coming down is called a retracement. So price is coming down is called a retracement. The reason is a retracement is because price is trying to retrace its steps before finding its way back up. So these are the places where we find entries. If we're going to move from here to here, we are going to find our entries in these periods of retracements. So now I want to show you guys that there are different kinds of retracement. I want to get right into this video as quickly as possible so we can begin to understand this matter. So there are different kinds of retracements, right? So the two kinds of retracement that I want to talk about that will spearhead the topic I want to tell you about how to use the Fibonacci retracement and the extension tools. There are the simple retracements and there are the deep retracement. Now, what qualifies the market to have a simple retracement is, for instance, let's assume this is the market going up. What you will see is that the market will get to a certain point and it will retrace. But now that it's retracing, there are two. This is what I mean by the two different kinds of retracement. There are some retracements that just get a little bit close to the top here and they start finding their way back up. Meanwhile, there is another kind of retracements that happen like this, where price is going up, gets to these points, for instance, this point, and retraces. So this kind of retracement is what we call deep retracement. So you can see these two retracements are not the same. One retraced just close, wasn't too deep, and started finding its way up. One retraced to this deeper and started finding its way up. Now listen guys, you do not trade these two kinds of retracement the same way, and I will tell you guys how to understand where price is supposed to retrace so you can know the kind of retracement to use. Now these two retracements will help you know what Fibonacci to use for your take profit, right? If this is the retracement that happens, there is a different kind of take profit pattern you're going to use for these retracements. I'm going to deal with this first one. For this first one, right, if you've watched my previous videos, you will see what I told you about how to take and understand these types of trade. Now, when the market was here, for instance, the market was somewhere around here and it dropped and it went up and started retracing. Now, these retracements, this particular one where the market comes down here, you have to measure it using the Fibonacci. And these retracements must fall between the 38.2 Fibonacci. Now look, I just drew my Fibonacci from this point to this point. That's how you draw it. So if this is the movement of the market, this Fibonacci will tell you where the retracement is. So these particular retracements, so you can see this one here, what should happen with this one, you can see it just touched the 38.2 Fibonacci, which is very good. So any retracement that does not touch the 38.2 Fibonacci at least will not be considered a retracement. In other words, if a price came down here and didn't touch the 38.2 and starts going up, we will not consider that move as a retracement. We'll just consider it as the price just moved from here all the way to here. So now when this market was able to come down, it was able to come down all the way to the 38.2 Fibonacci. So you can see this 0.382 here is called the 38.2% Fibonacci. So if the market is able to touch this 38.2 Fibonacci, that is and start retracing towards the top side and start continuing back towards the top side, the way you are going to take this particular entry, now there is the way to take the entry which I'm going to show you when we get to the chart. There are different ways to enter the market at this point. You're probably going to look for good patterns in the lower time frames, or you probably look for like a break of structures in these lower time frames. Now when you're able to get your entry somewhere around here, your take profit, now this is where I want you to understand. Now the way you're going to take your take profit on this kind of retracement is you're going to take your Fibonacci extension and you're going to put it from this point to this point and drag it all the way to the first point. Now remember, this is where you took your entry, right? You took your entry on these retracements. The moment you took your entries, I told you your SL is going to be 2 Fibonacci's away, so somewhere below this side here. Then your TP is going to be, when you take this extension from here to here and drag it all the way to the first point, your take profit, yeah, you're going to have two positions at least, maybe. So the first position, how I like to do it here, is that the first position is going to be exited around 1.27 Fibonacci, which is 27.2 Fibonacci, and the other one is going to be exited at 1.618 Fibonacci, which is the 61.8 Fibonacci, right? So two positions, one here and one here. Now it's not the same with this kind of retracement. Remember, I'm trying to show you this what I like to call the light or soft retracement. So it just happened a little bit here, touch the 38.2 or the 50 Fibonacci, somewhere in between that space, and you know we're going to take profit all the way to either the 1.27 or 1.618 Fibonacci extension. But in this particular type of retracement, what you will find out is that this retracement is called a deep retracement. So what happens is that, why do we call this a deep retracement? In the deep retracement, what price we usually do is this point will be a Fibonacci retracement between the 61.8 Fibonacci and the 78.2 Fibonacci. So what I'm going to do is I'm going to put this out here, and I'm going to draw, right? So in drawing this is the part where the market retraces. Now let me delete this so this stuff become a little bit clearer here. So I'm going to just draw it again. So what we're going to do is that, okay, so I'm just trying to delete that one so I can show you guys how this works. Now if you look at this point, you're going to see that the market was able to retrace somewhere around here. Now I'm supposed to put this point a little bit higher, so let me just drag it top. All right, good. So what you can see, I'm saying that this particular retracement area must be between the 0.618 Fibonacci and 0.786 Fibonacci. Now this is a deep retracement. How do you take your trades in this particular type of retracement? What you do is that when the market is able to retrace from this point and starts going up, once you're able to find your entries will be some kind of good pattern, a break of structure, or something good happening in the lower time frames, or even that time frame perhaps. So once you're able to find your entries around this particular time frame, how you're going to take your like I said, you're going to put your SL 2 Fibonacci's away, so somewhere below the side. Then what you're going to do is that you're going to use also the Fibonacci retracement. Now remember, in the other one I was able to use extension. The moment I understood my Fibonacci, that is in the first one, the moment I knew where my Fibonacci was, my retracement was happening, I used the extension tool from here to here and drag it all the way down, and I was able to get a good extension somewhere at the top. Now in this particular one, because the retracement is deep, falling between 61.8 and 78.6, this my take profit will not be an extension to take profit. My take profit will still be a retracement of this leg. So what I'm going to do is I'm going to draw the Fibonacci from this place to this point, right? So you can see what I've been able to do. So once I get my entry somewhere around this point, I'm existing at 78.6 Fibonacci, and if I hold it for more, if I have two positions, the next position will be at 1272 Fibonacci retracement. Now this is not the extension. The first one was the extension to get a take profit, while the second one is the retracement to get a take profit. Now if you don't understand what I'm talking about, I'm still going to go into the chart and we're going to see live good examples of how these happened in real time. And so guys, so let's take a look at this example. What you can see in this particular chart, I just want you guys to see this particular place, for instance. So someone is probably asking, then how are you supposed to be able to know where the price is going to retrace to so that you can be able to get your good Fibonacci? What I'm saying is this: what I do is that as the market is coming from all the way to this point, the moment the market gets to this point and starts coming down, what I do is I look at the left. You look at the left side and see the least retracement point in this particular left side of the market. Now, what I'm saying is this: as the market is going up and starts coming down, the moment this market starts coming down, you're already assuming that it's going to be a retracement. So what you're going to do is that you're going to look to the left and you're going to capture all the support and resistance zones that happen. But the most important support and resistance zones that happen here is the least one, the last one that happened. So for instance, there is a support and resistance zone somewhere here, but there is also a support and resistance zone somewhere at the bottom. So this is the last one that happened. So what you're going to do is that you're going to take out your zone tool and capture that point. So I'm going to capture this point here. So now I'm drawing this zone before this market dropped to this point. So I didn't know the market was going to drop to this point, but all I know is that this is the last support and resistance zone. So you can see how the market was able to come down, bounced on top of this point for a while, broke it, came up, bounced on it, and eventually came to the top. Now we can understand that this point was a support and resistance zone. Another support and resistance zone you'll probably see in the market. Why I said that one is the last one, the last important one, is because even if you look at this point, you will see a support and resistance zone. So someone is thinking, because this is a support and resistance zone, price is going to come here and retrace. But the strongest, you're going to have to be patient and wait for price to get to the last one, the one that below it is not order that is strong enough to hold price. So you leave the price and allow it to come. So this is the one you're going to get to. The moment the market touches this, the next thing you want to find is for the market to break some kind of structure, right? For you to find a very good entry, or you're going to go to the lower time frames and find some good buys, some good candlestick patterns or simple patterns. But in this particular case, what I can see from the market is that the market the moment the market was able to get there, if you're able to draw like a line here, you can see that the market eventually was able to break this particular point. Now, when the market breaks this point, what you're going to now begin to do is you're going to take out the Fibonacci retracement to test where this retracement has started happening. So I'm going to draw this Fibonacci retracement. So we can see, I'm going to drop it there. So you can see now that this particular point where the market started retracing is between the 61.8 and the 78.2 Fibonacci. So this is a deep retracement. So because this is a deep retracement, how are you supposed to take your take profit? What I said is that in this kind of deep retracement, the way to take your take profit is to take out your Fibonacci and draw another retracement of this leg. So it's the retracement of this leg that will become your take profit. So like I said, one of the ways I take profit is at the 78.6 Fibonacci, and the other place you take your profit is at the 1272 Fibonacci. You can see how price just got to this particular point and started retracing. So this is how you to take profits in the deep retracements, right? But whereas if I'm going to show you another one, let me delete this for instance so I can have good space. Now, what you're going to see here is that you can see how price was able to come here, and also remember, the moment price has been able to go up here and break this particular high, you can understand that price has started another journey, right? So when price began to come down, now the moment price starts coming down, I'll already consider that this is going to be a retracement, right? So what I'm going to do, like I said, is I'm going to look to the left of this point and find support zones that will probably be able to hold price and see where that gets me in the retracement level. So I'm going to take out my zone tool, and I told you what you're interested in is the last major one. So I'm going to take out the zone tool and pull it out here and just stretch it all the way to this point. So you can see this is a good point. So you can also find, someone can also find here to be a support zone, right? The reason why I keep talking about this is because I'm trying to let you know that it's not just the first support zone that is the important. You probably want to start looking from the second support zone, or if there is more below. So when price was able to get to this point, right, this is also will be considered a good support zone. So the moment price gets here and start making buys towards the top, now if you go to the lower time frame, you're going to find some kind of support and resistance zone somewhere here where price is going to break through. The moment price break through, which will be somewhere around this point, you're going to take your entry. So what we're going to do now is that we're going to have to test the retracement to see whether it is retracing at around the 38.2 Fibonacci and around that we're going to test to see whether it's retracing around the 38.2 Fibonacci and like the 50 Fibonacci region. So once you draw this Fibonacci somewhere around here, what you're going to find is that the market is already retracing. The market is retracing somewhere around the 38.2 Fibonacci and the 50 Fibonacci. All you can find is just some wicks protruding out. So you can see how the market was able to try to retrace around this point. So when you go to the lower time frames, you're going to find some good structures where the market will be able to break out from a certain structure. These are those places you're going to be taking your entry. Now, how do you take your take profits? Your take profits, like I told you, in this type of retracement will be taken at Fibonacci extension. So you take out the extension tool, tap it there, tap to the top and drop it all the way down. And like I said, what you want to do with this kind of retracement is that your take profit will be, now if you're able to find your entries around this point, your take profits will be somewhere around 1272 Fibonacci and also 1618 Fibonacci. So you can see how the market was able to hit this take profit and most likely hit the 161 Fibonacci later on in the future. So this is how you to take your trade, guys. This is how to take your trade. Now the reason why these soft retracements have good risk to reward ratio is because if you have a little retracement, it's probably because the market is trending, right? When the retracement is deep, it signifies that there is no real pressure, that the pressure in the market may not be too high. So your take profits can't be that high. You just take it around the way I told you to take it. But when you have this type of soft retracement, it signifies to you that the market is about to move in towards the direction of that trend with good momentum. So that's why our take profit is a little bit higher on this one, and we get good risk to reward ratios on these types of trade. So guys, I don't want to take too much of your time. I hope this tutorial was helpful. So ensure you like and subscribe and turn on the bell notification, guys. So I will see you guys in my next video.